Got it.
All right. So have you watched my video so far?
I did. I
And
did.
what are some of the things that made like interest or made you it makes sense to you, or maybe it doesn't make sense?
It makes sense because I started to learn options about, you know,
How long ago?
studying about 6 months.
Oh, 6 months. Wow. That's
Yeah, but I haven't really have the courage to jump into the market yet.
yeah, yeah. So you've been practicing with basically like a virtual account, right?
Paper
Um
money, thing or
Paper money,
swim
yeah.
paper money.
Virtual
Yeah.
money, yeah. So that's what they call it, virtual account or paper money. Now, what platforms do you use where you're located?
I use thing or swim as a platform.
Okay, so you could buy stocks and sell stocks there, and then
Yeah. Yeah,
you obviously and you could do options, right? You could do
right.
options on the platform. What is a platform called?
Thing or swim.
Well,
Like
put them in a chat for me
TOF.
because I never heard about that one.
Oh, you haven't? Okay. I think it's very
Oh,
popular. So
I guess
I
where
use
you're
thing.
from, the country that you live, right? Oh, Thinkorswim. That's what I use.
Oh, you
Oh,
did? Okay. Thing or swim.
oh, okay, that's great. So that's a really good news then, because that's what I use, and so it's yeah, Thinkorswim. That's what platform is. So it's a through the TD Ameritrade, right?
Right,
Um,
right.
yeah,
Because
Thinkorswim.
it's the only platform that allow you to, to do the paper money
Mhm,
without putting real money.
mhm, yeah, yeah, and they require at least about $2,000 to start. They said, you know. I don't know. So Thinkorswim is from the TD Ameritrade, what I
Right,
understand. The
right.
platform TD Ameritrade. Let me see. I could.
I actually in Asia, interactive broker is also very popular. I'm looking into that too, but unfortunately, they want you to fund the account first before they allow you to do paper money trading.
Yeah.
So I'm looking into that.
Well, what platform is that? What is it?
Interactive broker.
Interactive broker. Yeah, I'm familiar with that too. Interactive. Yeah. Um.
They
So
said
basically,
it's cheaper.
yeah. Yeah, the thing is this. So I was introduced to interactive, platform and or the Thinkorswim, and used to be Thinkorswim. You didn't have to have any money at all to open up account. They're live and a paper money account, and then they merged in with the Charles Schwab. Like just before COVID. So then now
Right.
they require at least $2,000 on your real account to
Okay.
start trading. So when my clients way back in like 2016, 2017, they only had to put in like $50, to have the real life account open. But now they require, I mean, you could leave it open, but they want you to at least start with the 2000. And and I think you have that kind of money is really um fair, because you got to have a little bit of money to really make a good money, and I'll show you why. Okay, so
Okay.
let me answer some of your questions so far. So you've been learning about option trading about 6 months now, and you try to watch my videos, or you watch my videos, and
Yeah.
it makes sense to you. But what are some questions that you may have from, taking option trading class for the last 6 months, and then from watching some of my videos? What kind of videos that interest you that I've done?
I watched one of your video explaining how you did the option trading.
Beginning, the
I
beginning.
can't, the beginning one, when you choose like a GE options, you limit yourself, I think like $200 or something like that. I forgot
Yeah.
the number.
Mhm.
I understand that, and I understood that you also choose, I think, a put options
Mhm.
at that time because the direction of the market is bearish at the time.
Right.
My my concern always is like how to catch the market direction, because like if you are on the wrong trend on the wrong side, you're losing money.
Yeah.
So that is what from my experience when I do the paper trading, I always lose a lot of money because of my direction that is completely
Yeah.
opposite. And
Yeah.
then I also find out my, since you bought the option, the put option, that means you just lose the money. Sometimes, when I learned some YouTube, they said if you want to collect the premium, become the option seller. But the problem with option seller, if it go against you, then you lose a lot of money.
Yeah. Yeah, so
So
there's so many
yeah.
different techniques out there, and so many people have a different belief. So my strategy is very simple. If you have a money in the bank, and right now you're getting like hardly any interest there, that is if you have like, $200,000 and you still get like, I don't know, maybe 25 cents or something like that, very, very little, right? With a lot of money in the account. So my strategy is this: if you can learn the strategies, how to make money and make a 10% consistently, with your trades, 10% consistently, like a weekly basis. And if you could do that, even 10%, a lot of times it's way more than 10%. I mean, but I'm saying like at least 5 to 10%, you're way ahead of yourself, against the bank, because the bank doesn't pay you that kind of money. So when you're learning the strategies, how to just set up your options really quick, once a month, and just kind of watch. And so you have to have a goal, you have to have a goal, and you have to have like a ways to measure, so
Right.
we talked about the business mastery where, there's optics are very important, because like when
Mhm.
you're trying to lose weight, like you just, exercise and you want to diet, but if you never get on the scale, you have no idea how much you have lost. And so people that are trying to lose weight, it's like they get on the scale and then, okay, I started at 100 pounds. All right, now I'm going to exercise, and then I'm going to eat this, and then like 15 days later or so, they measure. I'm like, oh, well, okay, I lost 2 pounds. But then, that they continue, and then they get on the scale again after 15 days later. You may go down lower, you may stay up, same weight, or you may go up higher. And then you're like, what am I doing wrong? Oh, maybe I'm gaining muscles. Muscles weighs more than fat. So maybe I'm doing exactly same thing, same diet, but my weight is higher because I'm building muscles. You know what I mean? And then
Yeah.
your clothes fit loose, because you're toning down, but your weight is more, getting on the scale because the, muscle weighs more. So you have to look at all different aspects of like whole picture, not just like, okay, I'm going to go on a diet, but I'm never going to measure. I'm never going to get on the scale, because last time I got on the scale, it's horrible. Like I didn't like the weight, so they never measure it. Well, same thing with the options, anything with the trading, you have to write down, you have to keep a eye on, you have to journal it basically. So what I'm going to do is I'm going to show you like a platform, Thinkorswim, you're familiar with it. And I'm going to go to my virtual account just for the study purposes. There's a few like a stocks or options that I have there just for the study, for the classes. And I just leave it there just to teach people, just to show them the example of like, why this is this and why this is that. You could kind of analyze my trades, right? And then we'll be able
Mhm.
to kind of see what's what. So we also talk about, excuse me, we also talk about the language. So when I first came to America, like I didn't know how to speak English. And so therefore I could not communicate with people. Can you see
Mhm.
this? Give me a
Yeah.
thumbs up. All right.
Yeah. Good.
Um, okay. So, you have to speak the language, like we talked about, the business mastery class, right? If you don't know the language, you have no clue, like what is
Right.
what. And I can understand people, I can talk to them, I can communicate. So same thing with the option trading or doing stocks or, reading the stock markets, you have to know the language. You have to know the bearish and bullish and, side markets and all those things, because then if you don't know, then you don't know how to set up a trade. Okay. So that have said, now, so as far as when a language is concerned, like terminologies, do you know what, like a opening date is, expiring days? Do you know what the trade price means? PL open means, or PL day? I mean, it explains it. What does a PL open means to you? Do you know?
Is the profit or loss since you open the options or the trade, and then
Until date.
yeah,
The day
yeah,
that you
until
fix
today,
it up to date, yeah. And then
and then
PL day is how the market is going. And so I really don't look at the PL day as much as, I don't pay too much attention to this, because this
right.
just whatever the market says. So look at this. So for example, like this one, Lemonade, it's a stocks that I bought for the study purposes. And I want to see, like, you have no idea when I bought this options. I mean, when I bought this stocks, right? So I'm gonna click here, and I want to show you a few tricks. So I click by the Lemonade and then right click here, and then it shows me all the things that I could do: create closing order, analyze, trading, whatever. And I want to look at, see, view trades. This will let me know what day, exactly what day, what time I bought this stocks. Okay, so I'm going to view trades here. Okay, so it tells me in February 2022. Okay, 2300 hours, right? And then I bought 10 shares of stocks because it's a plus 1000. If I bought a one stock, it would say plus 100. But because I bought 10 shares, it says plus 1000. And I paid $18. Okay, I bought it. Okay. Now, yeah, so current market is 13.76 per share. So this current market is below the price that I paid, that I bought a stock for. That's the reason why I'm losing money. So for me to make money, this market price, which is right in here, it's the same as mark right here in the mark. This has to be above 18 for me to make money, because
Right.
I bought it, so I want to sell it when my price, this current market price, is above 18. Okay. Now you noticed, go back here at the working order for Lemonade. I have set this up at 32.23. So what I do is, my strategy is I preset my closing order. So therefore I could do whatever I want to do. I don't have to, sit in front of the computer. I could attend other classes. I could do other stuff, and so the reason why I set this up at 32.23, well, I looked at the chart and it has gone up as high as this much. So I'm hoping to make money, even though I only paid $18 per share, and hopefully that it'll go up to, 32.23 is the credit limit, and then I'm going to sell it. So it's a pre-closing order. You notice it says plus 1000 here, Lemonade. And then when I set up a closing, I want to sell it at this price, and it says minus 1000. That just means, I'm going to close and I'm going to sell it.
Right.
So
Right.
that's, so now, so that's like over a year ago. So I'm not worried about it. Like I said, this is just for the class purposes, to teach people where to look. You should write them down, but if you don't write them down, then there's a ways that you could look for it, where, what happened, or when you bought this stocks, or when you got into this trade. Okay. So same thing
Right.
here with the Kodak. Okay. View trades right in here. And what year did I buy this? Okay. This is 21. So, so again, January 21. And I paid $6, and it says plus 200, that means I bought a 2 shares of stock at this price. And it's 450, so I'm losing 300. Okay. Now, this is options here. Now, options are, now you notice the days on the stocks, it doesn't have any days left. Okay. There's no expired dates. I will sell it when the market goes up, whenever I want the market to go up to, and then I'll just make money. But on the Wayfair, it's a stocks, and I have it written down in like certain day. But I want to see, you have no idea when I got into this trade. So let's look. Okay, so view trades. And then I got this option set up on the 10th of August. Okay. And then I bought a 1 contract. So right there, quantity 1 right there. And days, I have, the September 1st. So I got 2 more days left. Now this, I'm losing this much right now, but today is only Wednesday. So I got full Wednesday, full Thursday, full Friday. Okay. Now, at this point, I'm going to go back to my journal because I have to write down. So part of the option trading, I don't know if you're learning to write them down each day, doing your homework, just to kind of keep an eye on what the market is doing. Okay. So I set this up on the 10th of August, and on the 11th, so every day I do my homework. It takes me like only a couple of minutes. So every day I write down today's date after the market closes. I'm going to write down today's the date is the 30th of August. I'm going to write down current market price, which is 68.39, whatever the number this might be after the market closes. And then I'm going to put down this price right here, the closing credit, 0.91. And then I'm going to write down PL open. So those are the 1, 2, 3, 4 numbers that I'm writing down as my homework, daily homework. Because why? I use that as a leverage. I use it, my own homework, to make my trades, whether I want to lose less money or whether I want to make more money. That's how I gauge as to how much I'm willing to lose, how much. So you could basically say, so on the 15th, so 5 days later, and this one I was making 19.50. And then that same day on the 15th, later on, I was making $47. Okay. So, but then I still had a $17 days left on it. So the reason I didn't close that is because we have no idea, because my max profit says I can make $849 and just risking only, like I used up like 651. That means like they took out $651 off of my option buying power here, right? And then I can make 849. Well, obviously I'm losing, but at this point, see how it says, you've done this in the paper money. If it's in the money, you'll say ITM next to these numbers, right? You'll usually say ITM. But so that means that this is out of the money. So out of the money. So right now, 557 versus max loss is 651. So if I wanted to lose like 10%, let's say a max, I want to lose like 5%. So how do we set that up to just lose only 5%? Okay. So what you do is, so I'm looking at my journal here.
Okay.
Can you see me? Can you see me?
Yeah, I can see.
Okay. So this is my journal. My max loss is $651. So how much is 5% of 651? Because 10% is $65, right?
Right.
And so 5% would be what, 30, I would say 32, I would say, approximately about $32 is my 5%. And then $65 would be about 10%. Okay. So you could gauge that. So what you do then is this. There's so many factors involved, because when you set up to lose only, like 5% or 10%, then
Mhm.
again, we're doing trading with the fear. And we never get to set up our, closing credit to make a profit. So what it is like when you set up this pre-closing working order, right? Working order is right here. If you set up to just from the day 1 or 2 to say, oh, I don't think that it's going to go right, so I'm just going to set up a closing order to just, at the most, I'm willing to lose 10%. So you set up a 10% to close, then you're missing out on the opportunity to make, $200 or even $50 or even up to $849 of the max profit on this Wayfair. So that's not really fair to set that up. So what you should do, what I usually recommend is, like, you set up your trade and you set up a pre-closing order, and make sure that you set up a pre-closing order more than the debit price that you paid. So in other words, you take 875 minus 224, that is 651. You were to do this calculator. You got calculator here, right? So I want to show you. So calculator here. So you take this is the price that we paid to get into this options. I chose this strike price, and I paid 875, and I choose this strike price and I paid 224. So you go 875 minus 224. Okay, so we already know it's 651. So that is your, and then you times by 1, because you only bought one contract or one quantity right here, right? So you times by 1 gives you $651 is your max loss. Plus you got to add $1.32 for the commission. So the cost of trade is $652.32, basically, with the commission of $1.32. So now, if you were to set up at closing order on the Wayfair at 651, that means like you're not going to make any money, because because of break even, right? But so you want to set this up at least a little bit higher than, so I set it up at 15. Now I'm going to change this, because obviously I don't think, unless something drastic happens, but we have to look at the chart on Wayfair, for example, before I make adjustment on this. Because right now, if I was to close at this point, 0.98, then I'm losing this much, right? So I don't want to do that like a whole 3 days of, 6-7 hours of trading hours there. So I'm just going to change this, but let's go look at the, Wayfair. Okay, so now the Wayfair 1-day movement, look at this. It's gone way up. Now, if you were to look at the monitor here, and this is, I think it's also an up trade. Okay. So yeah, up trade. And so I would say, so my break even was 78.94 is my break even. Oh, okay, okay. So there's when I write my journals down, there's like a 2 or 3 break even, 2 or 3 current market. The reason is because when I'm searching, I write down the numbers of the current market if I'm going to set up now, and then looking at the pattern of how much movement has this Wayfair been since the time that I tried to set up a trade, and by the time it goes through, how much movement is there? 5 cents or 10 cents or even $1. So that's what I write down, different, like a current market at the beginning. When I was going to set this up, it was 76.74 was current market, and but then when the trade went through, and it was 76.21. So there is like a 53 cents difference. See,
Okay.
that's why I write those numbers down. So 68.59 is the 1-day movement. Now let's go and look at the 5-day movement, because I only got 2 days left, right? So now I'm going to look at 5-day movement. So 5-day movement says highest has been 69, and current market is 68.73. So what I'll do is I'll take 69. I'm going to go ahead and clear this here. So we do not want to set this closing order at 651 because we do not want to break even. We want to make more money. So obviously, since we've been talking, this has gone up. So this is a closing credit. You notice it says credit. So when this
Right.
number goes up, it's better. That means you're going to make more money. Okay. So
Right.
what we're going to do is I'm going to go ahead and we'll take 69, so that you could see, because I usually do this on the paper, but when I show to people for class, you take the highest market of 5-day movement, because I still have 2 days left, actually 3
Right.
days, so 69 minus 68.69. Okay, so 68.66, and then we'll just kind of stick with that. Okay, so 34 cents. Okay, now, so normally what I would do is I would add this 34 cents to my closing credit. So 34 cents, that would mean this number has to be $1.38, right? Because $4 plus 34 cents would be $1.38. Okay, so I could change this to closing replace order here, and then unlock this locker here. Okay, either you can move up or down, or you could just put $1.38. Okay, if that is you want to close it that way. Now the chances are this this probably will close at this number between now and Friday if I set this up this low. So how much are we losing? Well, remember the debt price that we paid, the credit the trade price that we paid, that was 651. So if you were to take 651, $6.51 a minus, let's say we're gonna set this up at what, $1.89. Let's just say $1.05 plus 34 cents, because you know how I got this number, right? I took the highest number from
139.
huh?
139, right?
Yeah. So yeah, so if I was to add the 34 cents to this number, will be 139. Okay, so we take 651 minus $1.39. So E and then 1. Okay, so I would lose $512. Okay, because right now I'm losing, okay, right in here, I'm losing 546.50. And if I was to set this up at $1.39, because we did the math, and then I would lose 512, which is, little better than what I'm losing right now, right? So I don't want to do that because I have a full 30 days. So what I'm going to do is I'm going to reset this number. Instead of 15, I'm going to at least set like maybe $7 or $8, because that's much closer for mark status to meet my pending closing credit. If this is at 8 or 9 or 10 versus 15. So, and by looking at the Wayfair though, there's a lot of movements here. So I bet you it could move up even like $2 to $3 easy between now and Friday. Okay, because right now it's like uptrend right now. So that means instead of me losing like maybe you know, $500, maybe I could lose like maybe 200, or perhaps maybe I may end up making like even $50, you know? So, so what I'll do is like, I'm a very aggressive trader. I like to take a risk, you know, and very
Mhm.
brave. Because when we live a life with the fear, we are stuck. We don't want to do anything. We don't want to go to work. You know, we're afraid of getting in an accident by going to work, you know, fear of getting into accident. We don't want to go to work. We don't want to do a trade because we're afraid that we're going to lose a lot of money. Then you don't want to do a trade. You might as well do another job, right? So a lot of times, a lot of like a rich people, they take massive you know, risk. So instead of dollar, I'm going to put at least probably about $8. Okay. So, and then I want to always make sure that what happens is when you put this today, that means if this trade does not close, which means is okay, so I'm going to show you this. If this mark status, which is current market, and this number, if they do not match, then this trade will not go through today. Because I put down day, that means when the market closes, this this order that I set up is gonna just expire, it's gonna disappear on me. So then I have to start all over. So that's the
Right.
reason I put this to good to cancel. So let it sit there until Friday, until expire day. So I put this to good to cancel. So then I don't have to
Right.
worry about it. So I don't have to reset this up like tomorrow morning or, you know,
Mm.
Friday, right? Because I have preset. Now, only thing that I'm going to do though is because it's going to expire, you know, on Friday, it has like 2 days left on it. So I'm just going to kind of watch how it's moving, how this is moving. So if this gets to be like $5 and like, oh, that's great, you know, or maybe $6, maybe this will be like 6.50 or even 7 on Friday. Well, then I'm just gonna, you know, close it to make a little bit of money. But as long as it does not say ITM, it doesn't say in the money, that means you
Mhm.
don't have to close. Okay. Now, if your closing credit is at 0, like 0.00, then it's not gonna close. You should not spend any money on a commission. Save yourself a commission. It says
Mhm.
there's no, not ITM side, and this is 0.00 closing credit. You don't have to worry about closing it because you're just wasting your commission to save yourself a little dollar here or there. Okay. So that's what I always have. All my closing orders, I have it at good to cancel. So this could sit there for 6 months or a year or 3 years or 4 years, 5 years, it doesn't matter. So when you buy stocks or, you know, even options, you hold your options for 30 days or 60 days. As long as you put good to cancel, it will not, you know, cancel out when the market closes. So is that
Okay.
helpful when you set
Yeah.
up your, okay. So
Yeah.
now, um, what else we're gonna do? We're gonna go over some things, how we're gonna determine how to get into the trading, for example. Okay. So let's
Okay.
look at this Wayfair, for example. So another thing that because we only have like a 1 hour, you know, right? And so I just want to show you one of the ways to like we always want to find a ways to save time and also save money, you know, no matter everything that we do. So one of the ways that I have discovered to save time is to like instead of going in here every single one of them and typing in W, what I do is like I basically just change this to yellow. Okay. And then so right here, well, it should be changing, but it may not. So see how I change the color coordinations, and then it gives me all Wayfair shows up, all of them. Now, when I'm setting up a trade, what I'm going to do is I'm going to look at, I want to look at the 1-day movement. I want to see how much movement there is within 1-day movement. If it doesn't have a lot of movement, then I'm not interested. But so I'm looking at 1-day low, 63.40, and then 1-day high is 68.79. So there is a good $5 difference here, right? So that means there's a lot of volume within this company. See, when you look at this 1 year, you can see a lot of volume. 1 day, there's not much of volume showing up. But if we were to
Right.
change this to 5-day, see that, the volume? And I'm going to change this to 10-day too, because I'm looking for certain patterns here. Okay, we talked about patterns at other class, right? So
Right.
everything, there is a pattern to everything. So what pattern am I looking at by looking at multiple charts when I'm willing to, when I'm ready to set up a trade? Well, I'm looking at what was the highest number within my 4-day movement here. 1-day, 5-day, 10-day, 20-day. Okay, you noticed, excuse me, the highest market is like 1 day was 68.79. This is 69.76, almost 78 right here. And here's a 90. Wow. And what was the low on a 20-day? 63, which is same pattern here. 1-day, 5-day, 10-day, 20-day low is all 63.40. See the pattern? I identify the pattern of low on all 4 of my charts. So we're good. So there's a consistency there when it comes to lows that it's hit, all 4-day charts, okay? But when it went up to highest market, there's different numbers there. So this tells me that 90, let's say we're just going to take a round number, 90 minus 63, that's like 30 some odd dollars difference in 20-day, which is good because you want to work with the markets that has a lot of movements like that. You do not want to set up a trade where it's going sideways markets and it doesn't have hardly any movement, even though max profit sounds really good. Like let's say your max profit is I'm going to make like 30,000, but you choose the company that doesn't have hardly any movement. You're going to be waiting. You may not even, your trade may not even go through because there's not enough movement there. So you want to choose a company that has a lot of movements like up and downs like this, which is good. Okay. So, so identify the pattern. We all have a low 4 numbers here. And now knowing that there's a $60 worth of movement there, isn't it? 90 minus 60, no, $30, $30, 30, right? So that's quite a bit. So like we should be excited to this trade. Okay, now the thing is this: if you were to just look at like a 1-day movement, okay, so people who doesn't know like how this, so you look at this. So 1-day movement, if you say, okay, I want to do a trade, what indicate by looking at this chart, I mean, you're familiar with a little bit, and I don't want to give you all the answers because there's no wrong answers because it depends on how you're looking at the, this candlesticks. So you know about this square, this chart is all about candlesticks, right? So red is when people are selling, and then green candlesticks when people are buying, okay? Buying and selling, getting into trade and getting out of trades and things like that. So if you were to look at the 1-day movement, what kind of trade would you set up? Down or up?
Up.
Okay. Why?
The chart is, going up.
Yeah, but it's coming down though.
Yeah.
Gone up, but then
Still,
it's coming down.
right. But if you draw the line, from the lowest point to this, it's
Right,
still,
right here to there, yeah. It's up,
it's
right?
still, yeah, it still have an
It's
up
up.
direction.
Okay. So let's look at the today's market. So if you want to look at overall markets for the each day, you could look at either like a market watch, and then you could see how the market is overall today. So, you know, it's not really bearish. It's kind of a mixture of half and half. You know, we got some, you know, quite a bit of green, and then there, I would say, you know, this market, I would say, not a bearish or bullish. You would say more bullish, no, more bearish than bullish, because there's a more greens popping up there. You know, they're bigger, but then there's a lot more small red dots everywhere. So, you know, just looking at overall market watch for today,
Can you
I would,
change the color?
huh?
Can you change the color of, you know, of the squares? Or
No.
is it with the software? Or come with the software? Okay.
Yeah, it comes with the software. We cannot change it. Only thing that we could do is like if you want to look at Microsoft and it tells you the last mark and then the percentage change and then market cap. That's all. So you just, you know, like
Okay.
Alibaba, you know, just, you know, hover over each company's, you know, the JPM, and it just tells you the percentage and the market cap and all that. So that's what you could
Okay.
do. Or so market watch or visualize, you know, just means same thing. That's how you look at today's market overall. Okay. Now, so if you were to look at, so let's go back to looking at the chart. So you says, okay, you want to do uptrade. Well, you know, you're right. You know, there's no wrong answer because everybody looks at things different, right? So the reason I said why, because I wanted to know your why. You know, so correct. When you if you were to draw the line from the low point to high point, there's going to be definite, you know, the line like the diagonal, right? And then going way up there. Now, lately it's been a lot like a bearish market. So now what we're going to do is if we were to change this to, now this is a 1 day, 1 minute movement, right? So let's say if we were to move this to like 20-day. Now,
Yeah.
so if you were to look at the 20-day movement, definitely like, oh, whoa, you know, so what would you do? How would you set this up or down market?
It will be down market then.
You think so?
Yeah. It's going down that hard. $30.
Yeah, so see, this is,
27. Yeah.
yeah, this is the reason why you really have to know what your goal is. You know, when you're setting up a trade, what is your goal? Is your goal to make 50% or 100%? Of course, its goal is to make 100%. Is it practical? Is it, you know, how often is that happens? You know what I mean? How often do you make 100%? You know, this can make like, you know, 200%. You know, because like, you know, 20-day movements, like, wow, there's like, you know, $30 difference, you know. So then you say, oh, definitely it's a, you know, down market. Now let's say, so like, that's why you should not look at one chart and set up a trade because it's not fair. You're not looking at the overall picture. And then you're going to kick yourself in the rear end and say, oh my gosh, why did I not look at, you know, the whole picture instead of just one part, you know what I mean? So if you were to look at the 10-day, you know, movement, and now what would you say? What, you know, trade would you set up, down or up?
Down, still down.
Okay. So first 1 day movement, you say up trade. 20-day movement, you say up trade. This one, no,
Down.
down. You said, so 20-day movement, you said down. So I'm going to write this down just because it's a pattern here. So 1 day you say up, 1 day, and then 20-day you say down, and then 10-day you say down. You would set up a
Right.
down trade, right? Okay. Now, this is a 5-day, 5-minute movement chart. What would you do?
Looks like a sideway.
Is that sideways? 69, 68. Right now, it's kind of like, you know, 5-day moves like right in here. But,
Yeah.
you know, do you think so? Basically, so we're not looking at this right now. We're looking at what do you think the market is going to do? It's going to go up or down?
Go down.
You think it's gonna go down? Okay, so 5-day movement, you would set up a down trade, right?
Right.
So then how do we know, like, we want to have a chart that every single chart that we look at is definitely says, I'm going to set up a down trade, down, 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 and then it will be good, right? And so let's just say we were to look at 30-day movement. So 30-day movement, highest is 77, okay, where 20-day was like 70. And then again, we see this pattern, 30-day is still 63.40 is the low, So we know that so far, up to 30 days even, it has not gone any lower than 63.40. So there's enough movement. So you determine, like I used to teach and say, we have to tweak the strategies a little bit because of the market. So I used to say, teach way back in like 2017 or 2018, like 4 or 5 years ago, like, okay, well, current market is closer to low, right? So I think that this will go up. You know what I mean? And so I think I'm going to set up an up trade because look at it, you draw the line, diagonal line right there, then you think, okay, well, let me see. We're going to go to drawing set here. Draw as a
It's drawing tools, I think.
drawing
Yeah.
tools here. And then we go this one here. This one, right? Ooh. Okay. So if we were to go right in here, okay, right there, right? So we know the diagonal right there, and you think so I used to say, okay, this current market is closer to the down market, 63.40 versus 68.40. So I'm sure that it's gonna go up now, so I would set up a up trade, but that strategy doesn't really work this year because the market's the inflation is high. You have to take a consideration of GDP, right? And what's going on in the world. So it working for me so good in the past, and then I've been having to like tweak my thing, and so that's what I'm still able to make money when the market is down instead of only making money when the market is up. So so you do it this way, but now there's no way, unless you're gonna set up your option trading to hold it for about like 30 days, then you could look at the 30-day movement. But it depends. So now you know what to do. Like, let's say if we were to set up a trade for Wayfair, for example. So do you want to do like a down trade or up trade? You had a three charts, 20-day, 10-day, 5 days, then you want to do a down trade. So, and then you only had a 1 day that you say you would do an up trade. Okay. So we would do like a one. So let's set up a down trade. Would you feel good about doing a down trade?
Right, right.
Okay. So we'll do a down trade. Now, so so if you want to do a trade, so you already know what to do, right? So tell me how much you know about how to set up options. So we're at the monitor, we're going to set up a down trade on the options. What would you do? Because then I could kind of help you what you know, what you don't know to help you set up a better trade.
Usually choose the DTE, the date to expired. Maybe 15 days, something like that.
Okay, so you would go trade in here, right? And then where would
Right.
you go to trade, set up choose a date to expire? Where would you go? Right in here?
Yeah, actually, there's a down arrow. If you click it, you will have all the dates. Yeah,
Right.
usually I just look at about 15 days, maybe
Okay.
15 September.
Okay.
Uh, dependent, usually dependent on how long I want to hold
Yeah,
the option.
yeah. So
Uh,
basically it doesn't, you could hold it for a long time, but you could close anytime. Like you could close like one day, depends on what the market is doing. So that is correct. This is how you find, and I wanted to make sure that you know how to, do this. So that's correct. So we arrow down to choose the date, right? So let's
right,
just say we're gonna do like I used to do like a 9-day, 7-day, 7-day or 10-day, but
right,
I'm holding it longer nowadays because of the market, the inflation. We're in a very different market this year. And so let's just choose 22nd
20.
of September. Okay, so 23 day. Okay, so we'll click here. Okay, now, so we're gonna do a downtrend. What would you do next? I want you to tell me, so then if you can't answer correctly or that it's gonna help you, then I would just teach you.
Usually I try to downtrade, so I usually choose put options.
Mhm.
Then what I did is like I use the current price, then I minus. You see the $8.0706
Yeah,
on the
right,
right. No, actually, I use the current price, which is 68.32 right now.
right,
I minus, if you see on the right upper corner of that date, like 22 September, if you go straight to the
right there.
right, you see like a plus minus 8718. You see that 62, no, up there. Still go up. It's not on the option price, it's on the title on the 22 September 23.
Uh-huh.
No, no, on the down arrow. You see the down arrow, 22 September,
Yeah,
down arrow on the left. Move your mouse on the left. This one, if you go straight the 20 through 23, 22 September 23, 100 weekly. If you go straight on the line, you will
right
see
here.
there's a no, go up again, go up. Okay, stop. Go down, go down. Okay, go down, go down to the 22 September 23, 23 days. Yeah. Okay, go to the most right. Go to the most right. You see there's a 62.85%,
Mhm.
and then there is a plus minus 8728.
Yeah.
So what I did is like I used the current price minus that number to get the price, the strike price that I wanted. Because what I learned is that this is the one standard deviation.
Mhm.
So if you have 68.41, if you minus 8.726, is about $60.
Okay.
So 59, $60. So I will choose that
60
59 strike price
right
or
there.
60, yeah,
Let's
for
say
my
we choose.
put option.
Okay, so you go to here. Do you click this or this?
Uh,
Which,
Usually what I
yeah.
did is like I sell and then I buy. I do the
Okay.
spread. So
So you
I
sell. So
I
you
sell
say,
59.
yeah, so
I
you
click
sell 59. So you sell 59 put sell, right? So it'll be
right.
minus. Okay, so we do
And then
that.
I buy the 58,
Oh, and then you buy 58. Okay.
yeah, for the protection. This is
Uh,
what I learned. So
okay.
now I got $14 credit
Uh-huh.
for about 23 days. Like hopefully the price did not reach that.
So this is a 10 contract. So let's just say, so you'll be making, so max profit will be 130, but you'll be spending 800, you'll be
Right.
spending 130. No, no
Yeah.
credit is 130. So 870 is a max loss, right? So now, so this is your style. Now let's look at this. Okay. So I'm going to edit here. Okay. And then,
Mhm.
so you look at this one and it's not a really good thing. That's how the school teaches you. And I find that you don't make really good money at all like this. Like you only gonna max profit is like 130 and the max loss is like $870. Wow.
Right.
But then also, let's look at this edit. And then we're
Uh-huh.
gonna right click here, okay? Right click in here. And then we're
Mhm.
gonna analyze trade, okay?
Right.
So if we were to analyze trade, and then I'm gonna unclick all this, and then just make sure that I just only click on this vertical, right? So the I'm gonna just anyway. So this, so look at this, how this
Right.
is not a good thing because why? My finger moves. So pay attention to here, 923, okay? And then today's the date, this number changes. So this blue line represents the day that it's going to expire.
Mhm.
And then this purple represents today, okay? So the UNISA, there's one break even number right there, okay? That's today, okay?
Mm.
So you're losing 221, but if we were to go down, if it's a down trade, okay, so this trade is not set up correct. The reason is because when I move this, when I move up, you notice the purple, the dollar
Mhm.
sign goes up. See that?
Right. Right.
That means we set up an up trade instead of down trade. Because when I go down, moving my arrow with my finger, I move down, then I'm losing money.
Hmm.
You know, so, and that's a vertical, it's a check box. But if I'm checking, then it's just a flat, right? But if I check the vertical, so we got sell. I'm trying to move this button, but it's not showing. Anyway, so I'm selling, and then I don't want to do that. Okay, so you notice, so it's not making, you know, so as I'm moving down, it's losing money. So let's just say that is, this kind of trade is how everybody teaches, because they just teach you just to teach you stuff, not to make money. They like, well, you figure out, but this is just a basic. This is what I was taught at school. Okay. Like one Y spread, 59 minus 58 strike prices. There's only one, right? That means the two numbers between this is called Y
Right.
spread. So there's only one Y spread. So again, let's pay attention. So that means, look at this break even. So I'm not saying that you're wrong. It's just, this is not even like, to me, I wouldn't even trade this, because this is what I learned and this is what I practice. That's what I came up with my unique miracle system. Look at this. In 23 days, okay, the market has
Mhm.
to move like $10, basically. 69 is current market, you know, and then 58.86. So we saw in 20 days, there's $30 movement, right? And, you know, when
Mhm.
you look at the chart, you know, there's $39, there's $30 difference between the highest and the lowest market on a 20-day chart. So when you look at this 23-day, you think, well, shoot, you know, like a 58 versus, you know, 69. Sure. You know, there is a proven chart that there's $30 movement. So if I was to like take a numbers between current markets, or which you did this way, you know, it's okay. That's an interesting way, but I don't use this at all. Okay. The reason
Okay.
because you take 60, I'm going to round it up to like 69. Okay. And then just say 58. Okay. Just rounded off numbers. Okay. So there's a $11 difference, you know, 69 and 58. Okay. So $11 difference. So you say, well, we saw $30 difference between looking at the 30-day movement. So $11, yeah, it's fine. So, but no, max profit is 140 and then max loss is 860. And so actually, that's not a good thing, but let me show you another way. Okay.
Okay.
What I do is this, I don't really trust this platform like it's going to move $11. Even though we saw a 20-day movement or 30-day movement, that we saw there's a $30 movement. And so what's the big deal? You know, like you go 90, 71 minus a 63, 40, that's like 1, 3, 6, 6. And then there's 26.31 difference versus $11. You know, I think it's gonna go, but I've done trade long enough. It's like, no, we don't, because a lot of people that are beginners, they just look at that. It's like, yeah, $30 versus like $11. Sure, they're gonna move, and that's why you see your trades are not very successful, because one widespread, it doesn't make any money, like seriously. So but my strategy is like, okay, well, I don't do that. What I do is, so remember, we're going to write down 58.86 is the break even. Okay. 58.86 the break even, and 140. And so then 69.01. Okay. Just a 69 will be 4, 1. So it'll be $10.14 difference, exactly 69, which is, you know, minus 58.86 is the current market. So $10.14 that it has to go up. Plus, it has to be 58.86 or below, you're going to make money. Remember, this is a break-even number. So 58.86 below, you're going to make money. So instead of looking at the highest, so now we're going to look at 20-day. We're going to look at, this is 23-day options. So we're going to look at 90 and 63 is the lowest. So we're going to look at 69 is the current market, and then lowest, because we're doing a down trade, right? So we're going to minus 69 minus lowest is 63.40. So that would be 6, 8, okay, $5.60 in 20 days. There's no way it's going to move $11. Okay. And so that strike price isn't really good. That's not a good strategy to use. Okay. That's better than nothing. Now, there is a, so you could say, well, if you want to do it like also, you could go in here, okay, and you could do like a vertical, right? Because this is single, we choose, you know, one strike price and then sell one and buy one, and then you could just go straight to like vertical. Okay, so vertical, I would just let's just delete this. Okay, is that okay? Let's strike price.
Yeah, sure.
Okay, so now we could go in here and say, okay, well, let's just, so by clicking this area, you could do calendar strategy, you could do diagonal, straddle, strangle, cover stops, you know, you could butterfly, condor, iron condor, there's all kinds of different things that you could do. This is cool, right? And then they pre-chose your strike prices for you already. So you could go into like vertical here, okay? So if you want to go with like 58, 59, that's exactly what you've done. And that's what the vertical, you know, so save yourself time and just go vertical instead of, you know, choosing this and that. But if you want to do it that way, that makes sense to you, so that's okay. But basically, they do have a vertical. It's a 58 and 59. Okay, right there. So if we were to choose this, like pretty much like same as that, right? So
Right.
strike price is choosing that. How come it's not? Okay, or we just delete that. So we could just do it this one, right? And then so it would be 56, 56. Okay, so it's lower than 58. See, when you did it your way, even though it's a 50, oh, that's a 56, 57. Let's just delete. Let's just go with the vertical here, and then 58.
Yeah, that one.
Yeah, right there, huh? 58, 59. Oh, we're gonna do a right there. Okay, on the put side, right? So 58, 59, we're gonna see what happens here. Okay. We know
Same.
this is going to be up trade, not a down trade. How?
Okay.
We're gonna go look at this, and then we're gonna analyze trade and the vertical. Again, I was right, it's going up trade. So I just wanted to kind of show you. So let's just say we're gonna go back to trade, and we're gonna delete this one. Instead of clicking here, we're gonna click here. Again, 58, 59, we're gonna click here. Now we're doing the down trade here, okay? How you could tell is if this, when you're setting up a trade, if this is green, that means it's a down trade. If it's a red, that means it's an up trade. That's how you could kind of see the color too, identify
Okay.
it. So if you were to analyze this, okay, now watch what happens. Going down, still is you're losing money, and it's going up, you're making money. So it's confusing, but because the color,
Is it because there's two options down there?
yeah, there you go. And you just click on this one right here. You got to unclick this one, right? So
Yeah.
I always tell people to unclick all, because then, you can't tell. So you just unclick all, and then just choose just the one that it's on right there, which is this, right? So now you could see as my finger moves, when the market is going down, my finger moves down towards lower market down here, like 67, 66, how I'm making money. See that?
Mm.
And then move up, I'm losing money, right? Okay.
Mm.
But so that's not a really good strategy. Okay. So people, they learn that and they do this, and that's what I came up with this unique M.I.R.A.C.L.E system, because I want my current market to be really close to my break-even number, to be close to my current market. That gives me a lot of leverage. Okay. So time is up, but I'm going to show you something. So we're going to delete this, because this is only one widespread. So so what you want to do is you want to be on the driver's side. You always want to be in charge of your own trade. Just like when you have a car, you don't want nobody to drive your car. You want to drive it, And so same thing here. When you get into a trade, you want to be in the driver's seat. You want to be in charge of your trade, not anybody else, not the money, not the market maker or other people. You want to be in charge of your own trade. You want to be in the driver's side. You want to be in control of this trade, right? And so usually what I do is I choose. So I'm just gonna go ahead and change this back to a single. Okay, because I don't like the way how they pre-chose my strike prices, because it doesn't make me money. Okay, so what I do is I usually say, okay, 69.21. So I will choose maybe let's just say 69, maybe 73. So I'm going to buy first, because I'm getting into trade. So we remember the break-even number was 58, and then 63.40 was a break even. So when we write these numbers down, we'll be able to see how exactly this works. So I'm going to choose like 73. So I'm going to choose a buy price first. Again, it says 630. You pay attention to it. Do you have enough money? So if you don't have, like, obviously I have enough money in option buying power, but if I have like maybe 300 and something, then I can only choose the price that I pay. It's got to be like 291. I cannot choose, 680, so that's another thing. But anyway, it's going to cost me 705 to choose 74. Okay. If I do a one contract, it's going to cost me, $705, right? So I'm going to choose this. Okay. I'm going to buy first. Okay. So you could just go, you could buy it or like that, or you just left click here. Okay. So when you left click, you don't get all this other confusion. You could buy and sell. You just left click and just, buying right there, plus 10. That means I'm buying. Okay. Now, what I'm going to do is I'm going to 74 put, right? So I'm in the money already, because all this purple shaded area, this strike prices, I'm in the money already. I choose that. So 74. Okay, so now I'm going to choose, let me see, 74, and then maybe 67. Okay, so 74 minus 67 is 14에서 450에서 3 빼면 7 Y spread here. So you take 74 minus 67 equals 7. Okay, so you see I'm buying 74 strike price on the put side because we're doing down trade, right? And I'm going to go with the 10 contract, and then I'm going to sell 67, which is minus 10 because 10 contracts. So you want to also make sure this is the same numbers. Like you can't have a 10 or 9 on the bottom. It's got to be same 1 1 or 2 2 or 3 3, to the same contract. Okay. So now, so this tells me I'm 7 Y spread. That's what this means, 7 Y spread. Okay. So I'm going to pay $4 for these two strike prices that I chose. So, okay. Now I'm going to always change that to good to cancel, because by end of the day, I don't want this to disappear because I studied it. I want this, this trade. So if it doesn't go through, hopefully it'll go through tomorrow, right? Unless the market moves quite drastically up or down, then you have to readjust. You have to choose a different strike prices. Now we're going to analyze this. Okay, so we're going to analyze. So right click in this any area, right click.
Right.
And then analyze trade. Now we're going to make sure we just have for one thing. Okay, so we're going to click that. Okay, and just that. So see how I'm going to make money. See that? When I go down, you notice now on the 23rd, when the market is at 69.09 on the bottom, see the bottom below right there?
Right.
When the market goes down to like 68, I'm going to make 1,660 on the 23rd of September. And then if the market was to hit 68.35 today, I'm going to be making $202.47. So by moving my finger, I know that this trade is set up right because it's making money as the market is going down. And I'm losing money as the market is moving up. See that? So that's how you could analyze whether you set up the trade right or wrong. If you meant to set up a down trade, you analyze it to say, okay, I did it right because I'm going to make money as the market is moving down. Okay. So that's kind of one way to know. You don't want to go through all that trouble and you're like, what happened? So just analyze it, kind of double check your work. Always double check your work just to make sure. I know that, but my clients don't know that. And so I just have them, check it before you go into next steps. So now we've done that. So now we're going to see how close we are with the current market versus break even. It's not going to be really, really close, but I think it's going to be better than before what we had. Okay. Oh my goodness. So this tells me 69.98, 69.13. So if we were to take, let me see. Okay. So we were to take 69.98. So 69, let's see. 69.98, which is my current market, okay, minus current market here, what's going on right now. So 68.99 minus 68.99 equals, there only has to be 99 cents movement, and then I'm going to make money. See how far that is? We looked at first one between the current market and the break even. There's an $11 movement. It has to be $11 movement. And that's, 23 days. Look at 99 cents. So first break even number was 58. And then second break even number was 63.40, which means we only have to have a $5.60 movement, but mine only 99 cents. And I have a lot better strategies, but I mean, this is just kind of give you a little bit of taste of my unique M.I.R.A.C.L.E system, because likely you're going to be making, so let's just say confirm and send. Now you want to, so now because the market has moving, right? It's moving. So then when we do this, it's going to change. So it's only $1,000 more, but look, we can make 3,000. So 68.86, 70 minus 68.86 is still, it's like $1 something, right? $1.15, 70 minus 68, right? And so, because it's basically 68, 69, 70, that's $2, but it's $1.15, the difference. 70 minus 68.86. So you can make, in 23 days, you can make as high as 3,000. But it's going to cost you $4,013 because, $13 is because we're doing a 10 contract. Now, if we were to just do like a one contract, then it's only going to cost, very little, but then you're not going to make as much money. So you can make $295 and you could lose as, $405. And the cost of trade is $406.30. Okay. So basically 405 plus $1.30 is 406.30. So this is much closer than what we had, the strike prices that you went or went with what the platform suggests that the strike prices that we should choose. Because you notice that all of them, if we were to go in here, the spread, like every single one of them, even the calendar strategies, even the calendar strategy says, oh, I guess we just have to choose 22. So even the calendar strategies, like 40, 40, 45, 40, these are like a sideway market. You would do that, but they're all one Y spread. One Y spread really doesn't make you money. So this is just a bunch things that they just people, for you guys to just play with, but you're not making any money. So you're like, oh my gosh, what do I do? It's like, and then people give up because they can't see that. So I brought it down to only 99 cents movement, right? for before, and so you could see in 23 days, we've seen like a, you know, $30 movement, $11 movement, you know, when you do the math, right? And 99
Right.
cents is like nothing, you know? So again, so I studied this like in 2016, a whole year, not knowing, because I thought there was got to be, because the way school teaches, like exactly like what you were doing, you know, and a lot of people teach that way. It's just a lot of unnecessary teaching. It just gives people just something to look at and something to study. But when it comes down to like, when, I don't know if you saw one of my clients, she's like so addicted to everything that I do, because like she's done her own thing for 30 years. And then she took option class from somebody else before she came to me. She didn't even know I existed, you know, and she heard about me. And then like she waited, take a class, like, you know, she waited for me for like 3 months. But now, like everything that I do, she always follows me. She's just so love my strategies because she's making money, you know, where she's, you know, doing things for like 30 years. It's like, I'm only making like, you know, I'm losing more than I'm making. She didn't really see the results, you know, and so right there, just that alone. So you may want to, you know, set that up, you know, for yourself, just to see what happens.
Mm.
You know, we're just gonna do a single. So what I'm gonna do is I'm gonna go in and let's just go 22nd of September and 23 day. And then we're gonna choose, what did I choose? Oh, 74 and 67.
Or-
Okay,
Right.
so 74 and 67. Let's just set this up. I mean, I just love this much. Like, I don't care if we went over an hour, you know, I just will end this class pretty quick. But, you know, good to cancel. But I have a lot better strategy. This is just a part of my strategies. Again, no, that's not it. That's delete this.
No, you missed one leg.
Yeah, we did a one leg. That's why. Okay, so I'll choose. So 74 and then 67.
7.
Yeah, and then control, and then there we go. Okay. So 69.95, 68. So you take 69.95 minus 68.74. That's a that's $1.21. Okay. So as long as I have enough money on the option buying power right here, you know, I could afford to do that. So make, you know, almost 3 grand in 23 days or sooner. So I'm going to send this because, you know, just to see what happens. So this has to go down to this number, you'll match, and then you'll go through. Okay. So that's how you set up. So that is just a very, 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 very portion of my class. So when people pay for my classes and take it for about like a month or so, they could really, and because I actually help set up a real trade. So we do this kind of trade with the real money because the people are so afraid to do that, right? And so anyway, I went over, I hope you don't mind.
So,
But anyway,
just
so hopefully that this will go through. And if not, if it doesn't go through, then we may have to just come back and replace, and then you could unlock it, or you could just, you know, switch this number to up or down or whatever, right? But just unlock it is like a current market. It's going at 408. So just because I changed, because the market is moving, which is a good sign for us to do this trade, because you want the market to move. If it doesn't mean move, then, you know, you're not going to make money, or you may not even go through. And sometimes the market moves so fast that it may not even go through when we set up, So again, then you're gonna have like a different break-even number here, 69.87, but still like only like $1 difference here, 69.68 right there, right? And so anyway, so we'll just kind of watch that. You could set this up and, since you know how to set up and see, we'll just kind of watch, and see what's going
Right.
on. And then if you make like even, $200, hey, close it. Depends on the market. If you want to go for $2,000, let's go for it, right? But yeah, so this is how it's done. I hope that this was very helpful to you.
Yeah,
Is
it
that
is.
something like it opened your eyes, right?
Yeah, I need to analyze what you just did and
Yeah.
then to learn more.
So
Yeah,
yeah,
thank
if you
you.
want to pay for classes, we could get you to much better, faster results. And like I say, I want people to start making money. I don't want them to play with it forever and ever and ever where they feel comfortable. And that's why when the mentor and a coach comes and say, let's execute, let's have you start making money, start making money, right? And we do it with the live trading, because not too many people, they don't do a live trading, and if they do,
Yeah.
they teach you all these technicals and stuff like that. But me, like, I want to make money because I want you to use money, make money and start using it, you know. So we could play with this for like, 5 years. Sometimes we say, wait till I have money, wait till I feel comfortable, wait till, and like the business mastery class with the fear, we wait forever. And so, from now on, like within 10 years, you could be a millionaire or sooner, you know.
Mhm.
And what can you do with a millionaire? You can make more money, right? We know that it's really, really important to have a lot of cash flow. Having a lot of business, making your business grow doesn't make you rich, but having a lot of cash flow makes you rich because you could use it. You're not being tied up. Your cash flow is not tied up and not able to use, as you wish.